Hi there, welcome to Kneppy Invest and welcome to July the 11th, 2024. We have just about 1.5 hours left of trading today, and it has been a good day. Everything seems to be up. All indices and sectors are in the green and highly in the green. So it seems like it's been a broad bullishness on the Australian markets, and the reason why everything is up big today is because the American markets were all up. In fact, all the major indices in the United States were up by over 1%. If I remember correctly, NASDAQ up by 1.09%, Dow Jones up by 1.09%, S&P 500 up by 1.02%, Russell 2000 up by 1.1%, and the Russell 3000 was up by 0.99%. I'm going to round that up to 1%. And the reason why that is important is because in the past, I don't know how long, 6 months or so, most of the heavy lifting in the American markets have been done by the Magnificent Seven, particularly Nvidia, but we can't forget Amazon, Apple, Alphabet have all had, or even Meta, all had really nice rallies. And that's usually means the NASDAQ has risen, Dow Jones falls, S&P not risen all that much. But today, it has been a broad bullish day. Everything has had a good day. Well, not everything. I'm being a little bit general there. But a lot of companies have had a good day on the American markets, and that's translated to the Australian markets today, and everything seems to be up. Okay, so what is the agenda for today's video? So I have not had a look at Twitter, and I would be shocked if there weren't some tweets in regards to how this was a really broad bullish day on the American markets. But unfortunately, didn't have a look at Twitter. I've been busy for today after a night shift, but I will have a look at a few comments. I also will touch upon a few things that have happened within my own investing life during the past few days, particularly at 3 o'clock this morning. I'll talk about those towards the end of the video, and I think I'll touch upon a few comments towards the end of the video as well. But before we do that, I'll have a look at the ASX today, the best and worst performing sectors, indices, and also companies. We'll also have a look at the top 5 stocks of the day. And I had quite a few companies to choose from. So quite a few companies did not make it, but I will touch upon a few of those companies as well. And then we'll do the top 5, of course, stocks of the day. I like the selection I have chosen for you today. And if I have time, before I have a look at comments and your questions and a few of those interesting things that have happened to me, my investing life over the past few days, I might have a look at some charts. So let's get stuck into the ASX today. So let's start by looking at the sectors and indices. And I'm assuming everything's up. Utilities are only up 0.23%, but that's a little bit more defensive, so that's okay. But real estate, IT, healthcare, materials, industrials, energy, all up by over 1%. Gold's had a great day, up by 2.44%. I have a feeling that uranium's had a really good day as well. Not that good. I just noticed quite a few uranium companies were up pretty good as well. But yeah, everything's in the green. I'm just going to expand the all ASX indices and market index just to see if there is one index that's not up. No, they're all up. The worst performing index is utilities. Yes, so only up by 0.28%. Now let's have a look. I'm just going to have a look at the ASX 20. And the ASX 20 is up to 0.76%. So a few companies probably down. So this is something you have to consider when everything is up by a fair bit. Not all companies will have risen with the bullish tide. So which companies did not rise or have not risen today? Still an hour and a half left of trading. So these companies could still be up by the end of trading. But which companies not up? Which companies in the ASX 20 not up? And ANZ Group, in fact, is down by 1%, which is a little bit of a shock. So 2 down, 18 up. So not a surprise. And the 2 companies down, ANZ Group for some reason down, and WiseTech. Very bullish chart, growth company, tech company on the ASX, that's down. So this bullishness has not translated to Wise Tech. Even Macquarie Group only up by 0.2%. But which companies have had a good day today? Fortescue, CSL, QBE, Goodman, and Woodside all up. REA Group all up by over 1% today. Okay, so let's move on to the best performing and the worst performing companies on the ASX. Hopefully, a few of these companies have made it into my top 5 announcements and maybe even into my honorable mentions, companies that did not make it. So let's have a ganza. Is that a word? A glance? Ganza? I have no idea. Okay, coming in at number 1 by percentage change is Augustus Minerals. It did not make it in my top 5 announcements, but it is a company that I did want to look at. So let's have a look at Augustus Minerals right now. Up 136.84%. I have a feeling, just based off the turnover, but I do have a feeling, and the market cap's still fairly low, it's 7.68 million. I have a feeling the share price was up by even more than 136%. So let's have a look at this company. They must have released an announcement today. I'm assuming they did. And the share price was as high as 11.5 cents. Started the day at 6.2 cents. So the candlestick is going to be interesting. So obviously, this company released a pretty good announcement today. So new high grade, 35% copper and 10 grams per ton gold rock chips at Tai Tree. So this is rock chips, not really a drill, just rock chips. I wanted to have a nice little picture or photo of the chips. So a lot of times they will have the nice little photo. I don't usually, no, there it is, a nice little, well, I suppose it's a nice little photo. Let's just zoom in. Don't know why I did that. I don't have to press zoom right there. There it is. It's a nice little, don't know if that's a rock chip. Sometimes when you see the word rock chips, they just have these really little chips, and that's all they have. So where is this project? Oh, look, you can see the gold in this rock chip. Look at that gold, it's so obvious. So where is this project? I'm going all over the place here. Oh, there's a map. I'm trying to find a map. And there's no locations on this. We could go to the about section. And that I'm assuming they have a about section. Here it is. And that looks like it is in Western Australia because that's the Indian Ocean. Gascoyne Junction is the only town I see. Carnarvon. Okay. So yeah, West Australia, mining exploring company, exploring for critical minerals, vital for the advancement of electric vehicles and renewable energies. So lithium, rare earths, and copper. Okay, so let's have a look at a chart for this company. And what I'm looking for is a breakout. And I am paying more attention to these sort of companies and these sort of days. And I'll talk about why at the end of the video when I talk about the 2 important things that happened to my investing life in the past few days. So Augustus Minerals, let's have a look at the chart. And is this a breakout? That's what I'm looking for here, a breakout. And I'm looking for a really bullish one-day candlestick. I wouldn't necessarily call this a bullish one-day candlestick. I want to see if 10 cents is broken either the rest of trading today or tomorrow, because 10 cents is very important. But we have seen a little bit of selling today. I want to see a really bullish one-day candlestick, but really good volume. Nice day today. This is on the board. It is bordering on a breakout. So Augustus Minerals, and the market cap of the company is fairly small. Okay, so Augustus Minerals, talked about you. Don't have to discuss you anymore. Clara Resources did not make it into my honorable mentions, but up 90.91%. I'm just going to have a quick look at this company because I can't dismiss when a company's share price has risen by 81.8%. 4.3 million sale of first 10 shares. Interesting. So is this, I don't know, Clara Resource. Clara's stake in first 10 sold, realizing net proceeds of 4.3 million. This is another case where, they don't have an about section. Okay, so I don't know anything about this company, but that's sort of intriguing. They are getting money from mining. I don't know. Let's have a look at the chart. Can't dismiss a day like CA7 or C7A. I was going to say, there's no company with that ticker code. C7A. Based off this tick code, this company has been long on the ASX because it's got a number there. And the chart, some big volume came in yesterday. Not as big as today, but loose lips. Chart has been a downtrend. So it looks like this company listed on the ASX back in June 2023 based off this. Or maybe something happened to this company. Anyway, maybe it was a backdoor listing. I don't know. Share price has been a downtrend since then. This is just like the other one, AUG. There has been a little bit of selling today. Share price got as high as about 2.8 cents. So share price of this company was actually above 100% at its peak, 2.8 cents. Opened at 1.3 cents. So there was no bullishness in this company when it opened. It's been during the day. Okay, so that's Clara Resources. Two companies I've never heard of before. And in fact, I've already forgotten what the first company was called. Augustus or something? I definitely will need to put both these companies into one of my watch lists, which is the high volume spec, which is a very important watch list for me. And Augustus, is it Augustus? Yes. High volume spec. And looks like this company had a really good day on the 25th of May 2023, up 481.8%. That's a pretty good day. Okay, let's go back to the best performing companies today. Otherwise, low volume. A lot of companies had a good day today. Synlait Milk up 47.8%, and that's on the back of A2 Milk saying they will approve the funding or the loan that Synlait Milk needs to survive. I don't really want to discuss that company. I don't even care if this is not going to be a breakout. So that's probably one of the reasons why, even though share price is up a lot, I don't really care about this announcement. This is an ugly looking chart. And even though the share price is up a lot, it's still not, it's not worthy of talking. And it's all about getting approval from a shareholder of the company, because A2 Milk is a shareholder, a very large shareholder of Synlait Milk. And that's all it is. It's not the sort of announcement that would get me excited. So that's Synlait Milk. Zelera Therapeutics up 26%. I did actually see an announcement from this company, but it did not feature in my honorable mentions or companies to look at. That could have been a mistake because that's a nice rise in share price. So Zelera Therapeutics advances Hope Autism Drug Program with US FDA meeting. That's sort of interesting, isn't it? So let's have a look at the chart for Zelera Therapeutics. And yeah, the share price, it's a massive, huge day for this company. 31st of May, I remember this. I think I remember this, up 224%. And then two big down days. The share price has fallen flat since then. Okay, so yeah, they can see why I'm not paying attention to this company at all right now. So even though it's been a good day, just one good day does not mean share price is in an uptrend. And other than that, no other companies I want to discuss there. So let's have a look by market cap. So we have Telix Pharmaceuticals. Only up 10.3%. So this company is in my top 5. In fact, it's coming in number 1. Clarity Pharmaceuticals has had a good day. And then we have had a couple of uranium companies, Boss Energy, Deep Yellow, Next Gen Energy's had a good day as well. Ora Banda did make it into my honorable mentions, one of those gold producing companies that released their production results, up almost 10%. And then a few other uranium companies, Lotus, Bannerman, Cetire's had a bounce. Don't care about that company. Select Harvests is on a bit of a run. And there's Callus Metals. Had a really good day yesterday, and that bullishness has moved into today, up another 9.9%. Let's have a look at the quick chart for Callus. It looked pretty good yesterday, and it's looking even better today. Beautiful looking chart for Callus Metals. Anything else there? Race Oncology. I'm liking that company because I'm trading that right now. Okay, so let's have a look at the worst performing companies. And this is when you don't want to see many of the companies that you own in this particular list. And funnily enough, Melbana Energy did release their Appendix 5B, if I believe correctly. So qualitative report and a webinar for Block 9 update. So obviously, the market doesn't like it. Doesn't like something this company has released today. Now, that webinar for Block 9 update was not marked price sensitive. So the market didn't like something in their qualities activities report and Appendix 5B. Now, this company does not have any receipts. In this quarter, they had no receipts. So I looked at that and moved on to the next company. But the market doesn't like this company today, at least, for some reason. So let's have a look at the chart. And, oh, the chart is ugly. Ugly, ugly, ugly. In fact, the share price of this company on the 27th of June, not that long ago, fell 45.9%. That's probably why I remember this company, is because of that day. I probably would have mentioned Melbana in my ASX Daily Rundown video on that day. So chart looks ugly. And even though share price fell 45.9% on the 27th of June, that was get out as soon as possible, because the share price has kept on falling since then. Otherwise, we have Keely Resources. I was waiting for that share price of this company to drop to 10 cents. And I'll discuss why I was waiting for that company to drop to 10 cents later in the video. And that's all she wrote. Okay, so let's have a look by market cap. So WA1 Resources, let's have a look at that company. They're down 9.3%, but they did a capital raising. So that's the reason their share price is down, because of that capital raising. So more than likely done at a premium, probably at 10%, not a premium, at a discount. So more than likely 10 to 15% discount to where the share price was. They also released their activities and cash flow report. But this company, I'm assuming, has is not in production. So that was sort of pointless. But they did an institutional placement. So I'm assuming institutional placement was done at a price of 17 cents. So let's open up, see how right I am. I'm just doing that based off the share price. It was as high as 17.41, as low as 16.65. So in between those two is about 17 cents or $17. I think the best case scenario, maybe it's not best case, but there's a chance that capital raising could have been done at $16.50, which would have been a pretty big discount. So let's have a look. $17 per share. Okay, 60 million. Which means it's not many shares, because the share price is $17. So we're talking about only a few million shares, so 3 million shares or so, 4 million shares, between 3 and 4 million shares. And the chart for WA Resources is pretty funky. It's all over the place. I think this would be a absolutely a day trader's dream. Day traders are probably having wet dreams over this company because of the volatility of this company over the past 2 months has been max, and they're loving it. And it just continues with today. So that's WA1 Resources. I can scrub that off my talk about list. And anything else here? AML 3D is still volatile. Yep, nothing else here I want to talk about. So quite a few companies, gold producing companies, released their activities report. So we're talking about, what I'm going to do now is just show you the charts. So we have Orabanda. Chart looks pretty good, and I think continues to look pretty good for this company. It looked pretty good. I did have a quick look at the activities report, and I think things are moving in the right direction for this company. And I would say, just based on the chart and the share price movement, the market thinks exactly the same. So a nice looking chart for this company. It's been looking really good. In fact, I've been following this company since about November, when the share price was 20 cents. So this could have been a bagger for me if I bought a position in the company back then. We also saw Pantoro. Pantoro released their activities report, and I think the share price might be down. Yeah, share price is down 5%. Now, this is another really good looking chart as well. Beautiful looking chart for Pantoro. So obviously not as quiet. The market didn't like this as much as Catalysts, as Orabanda, Aurelia Metals, and I'm hoping they didn't like it as much as West African Resources. So let's have a look at the chart for this company. Hopefully the share price is up, because I am a shareholder of this company. Share price is up a little bit, not as much as I probably wanted. So they just did a capital raising, and apart from that capital raising, where the share price did drop a little bit, the chart looks pretty good for this company too. And one of the reasons I do own this company is because they're going to be doubling their production, because they will be starting a new mine within the next, is it 2 years or something? Maybe next year. And they will actually double the production. And based off many things, I think this company is cheap. But they have production. Their projects or assets are in Burkina Faso, and there is, I suppose, a bit of a sovereign risk, even though a few years ago there was a coup. What do you pronounce that? Coup d'etat, whatever you want to pronounce it, in Burkina Faso, and it did not affect this company at all. So Burkina Faso has experienced some governmental stress, and West African Resources just keeps on producing gold. So that's West African Resources. Another mining company released their production, and that was Aries Resources, which is a gold company. They might have a bit of a copper company. They might have a bit of gold as well. But this chart, it's up a little bit. The share price of this company is going to be correlated to copper. I'm not the biggest fan of this company, to be honest with you. And the main reason I'm the biggest fan of this company has to do with Washington H. Soul Pattinson. They had a project mine. They sold it to Aries Resources, and Aries Resources then put it into mothballs. I think that was pretty nasty from WH Soul Pattinson, but Aries Resources should have done the due diligence on that project. Anyway, chart doesn't look as bullish it did maybe a month or 2 months ago, but that's okay. And I'm just going to discuss a few other honorable mentions. So I've already looked at Synlait Milk, and that's all I wanted to talk about. KPG, Kelly Brands, released a bit of an update today. Share price up 1.85%. A trading update. This company currently has a market cap of, where is it? 341 million, a P ratio of 170.7. How true is that? And a dividend yield of 0.6%. I had a look at this particular trading update, and they also had some of the numbers in here. So what was it? NPATA. So underlying NPATA somewhere here. Yeah, underlying NPATA for the year is going to be, that's KPGH and controlled entities for the parent only, 7.5 to 8.2 million. So it means the P ratio of this company is still quite high. So I'm assuming that controlled entities, a lot of the money this company makes goes to those controlled entities. So shareholders don't have access to all this company's profits. That's what I'm assuming by reading this. I just think of this company, it's an accounting company, if I remember correctly. And I don't like these sort of companies that are labor intensive. So accounting companies, lawyers, and anything like that, accounting and lawyers. I don't like those sort of companies for investments because they're highly labor intensive, and the company can't, it's very hard for these companies to find scale. However, for some reason, the market likes this company and it's trading on ridiculous valuations right now. But now, in saying all that, you can't say anything negative about the chart. The chart looks really good. I'm not sure why. Anyway, I have no interest in even thinking about trading this company because of the valuation. But maybe that's to my detriment. But I think there's plenty of opportunities out there. And I have read research that does suggest that valuation does matter when it comes to trading. That if you do find a breakout of a company that is really good value, there's more likely for that share price of that company to go on a really significant run, and less likely if the valuation is quite high. So I am wary of trading companies that I think are overvalued or maybe even significantly overvalued. And I am sort of attracted to more value trades, which is weird because I've never really been a value investor. Maybe briefly, but never really been a value investor. But going to trading, I'm sort of becoming a value investor. That's where the opportunities, or the sort of opportunities I am looking for. So that's Kelly Investors or Kelly Partners, whatever you want to call them. Another company, Netwealth, released their quarterly update. I won't look at that company. I think it actually might have been the monthly update. So they release a monthly update every month. No, a quarterly business update. And the share price is down. So let's not discuss Netwealth apart from having a look at the chart. This chart probably looks pretty good. Still looks pretty good, I think. Hub 24 definitely looks good. Yeah, this looks pretty good. And the valuation of Netwealth and also Hub 24 are quite high, just like Kelly Partners, which is another reason why I actually sold over Hub 24 a little bit too early. because the valuation was extreme. And I have no doubt that there is possibilities that this company's share price might just go sideways for a few years because of the run-up we've seen in the past 6 or 7 months. And finally, before we get to the top 5, Orthocell went into trading hot because of something to do with Canada, approval for one of their products in Canada. There it is, regulatory approval to commence sales for striate in Canada. Share price up 6.76%. But the chart, does nothing for me. This is still not a breakout. I think we need FDA approval for this company, maybe to see the market excited. Share price is going sideways. Even though the share price has risen 7% today, share price going sideways. No trend at all for this company. Okay, so let's get to the top 5 announcements of the day. Starting with FBR. This company has been in the news recently. In fact, Motley Fool, what was it? So I don't go to Motley Fool website, but a lot of their articles pop up onto my news feed, FBR. And so sometimes I will see these little, here it is. This is the one I saw. Have you heard of this ASX robotic stock? It's up 75% in 3 days. And I was thinking, I wonder who that is. And then I went, yeah, it's FBR. It's FBR. Definitely Scott Phillips is not talking about FBR. And the whole reason why FBR has been in the news is just have a look at the chart. Chart has been spectacular. But when you see a chart like this, share price rising 75% in 3 days, eventually you will see a bit of profit taking and the share price will fall back. And possibly we have seen a little bit of that today. Also, look at the volume, massive volume coming in. So why am I discussing FBR now? So they released a couple of announcements today. Quarterly activities report, Appendix 4C, and a response to ASX price and volume query. One reason I talked about this company the other day is that Hadrian X arrived in the United States and the market loved it. So what I'll do is I'll open up both of these announcements because, they're in itself, both these announcements are okay. I'll have a look at these announcements every single time. So the first thing I always do when I open up Appendix 4C, I don't look at commentary. I don't care about the commentary. I care about numbers. Unfortunately, their Appendix 4C, or their cash flows from operating activities, is found on page 4. Sometimes you have to troll through 20, 30, 40 pages of nothingness to get to the important information. So what I'm looking for here is receipts of customers, 131,000. So it's low. So this is still a story stock in my opinion. They're not generating much revenue or receipts, very little. So this company still has to prove themselves to me. Maybe past portions of the market are excited and FBR don't have to prove anything to those particular investors. Maybe they're more risk-taking investors, but I'm a little bit more risk-averse and I need proof. One of the reasons I need proof is I have been following this company for years. And when I say years, I am talking probably since 2013, 14, when they were known as Fast Brick Robotics. Maybe not as long as that, maybe 2016. So they were known as Fast Bricks Robotics. So, and back then it was all about they need to prove their model, they need to prove their technology, robotics technology, building walls of bricks, that sort of thing. Anyway, so that's Fast Bricks Robotics. So still burning through a lot of cash. In this particular quarter, burned through $9.2 million of cash. So they are burning through cash, and eventually they're going to have to stop that cash burn by selling more stuff, producing more cash receipts, or continually going back to the market for capital raisings. And eventually the market will get sick of that, and that would be a problem. And how much cash they have on hand? Ooh, proceeds from borrowings. They are starting to borrow money. So $3.7 million of cash. They have to do a capital raising or sell a lot of stuff. And let's have a look at the debt. So currently they have $7 million of debt. Now the market cap of this company is actually quite high. It's about, is it 200 million? Might be 200 million by now. Yeah, 230 million. They also have 4.4 billion shares on issue. And because of the cash burn, there is a possibility this company will have to do a capital raising quite soon if they have not done one yet. So let's go back 3 months. I haven't seen a capital raising yet. In fact, the Hadrian X departed Australia on the 17th of May. It took a long time to get there, didn't it? So it took them almost 2 months. Didn't realize it takes so long. Okay, so that's the Appendix 4C. I have no interest in this at all. In fact, look at the interest rates on some of their borrowings. It's quite high. I see a 15% here, a 17.99%. Okay, so let's have a look at the ASX price and volume query. Is there any interesting information in this? So the first question is answered with a no, which means I don't have to answer question 2. Unlike that company yesterday. Who was it yesterday who did answer? Said no the first question, but still answered question 2. Who was that? I forget. I'm looking at all my companies that I talked about yesterday. I can't remember. I can't remember. Or was it the previous day? So I have a notebook and I write down all the companies I talk about every single day. Yeah, I can't remember now. It's not important. Anyway. And the most important thing here is question 3. Does the company have any other explanation for why the share price has rallied a lot the last few days? And they just mentioned binding suite of agreements with CRH Ventures Americas, talking about factory acceptance testing. Okay, so there wasn't any really new information in this because we're going back to January and February in this, and then 8th of July, they just talked about Hadrian X arriving at the destination point, which is not the sort of announcement that should drive the market wild, because the market should have known it was eventually going to arrive at the port in the United States, because if it didn't, then the boat sank, or maybe it was abducted by aliens. So this should not have been surprising news to the market. But FBR believes the price movement and trading volume highlighted in the ASX price query may be in response to progress made so far in the program with CRH Ventures in anticipation of progress to come in FBR's commercialization international expansion. So anticipation, FOMO, that sort of thing. So that's coming in number 5. We have FBR. I am not going to trade this at this point. The share price has risen way too quickly and too hard for me to get too excited just yet. Now, if the share price pulled back a lot and I see share price starting to turn back up, maybe then, just maybe. Okay, so coming in at number 4, MSV, Mitchell. This is a company I do own, M Trading. Share price up 5.7%. Now, it's sort of a not that sort of interesting announcement. They have extended their buyback. Now, the reason why I am going to talk about, and the reason why Mitchell Services has come in at number 4, is because of their commentary here. I just love this commentary. This is exactly what I want to see when I see this sort of announcement. I just want to, this is great. Okay, so pleased to announce that as part of its ongoing capital management strategy. Now, I have mentioned in previous videos, the most important job of management of a company is capital allocation. Now, this company is producing cash in their business. So they have to decide, what are we going to do with this cash flow? In fact, they mention here what they could do with the cash flow. In fact, they call it their 4 pillars. They are dividends, buybacks, growth, and debt management. And that exactly is what they should do or think about doing. Now, a buyback is only really beneficial to shareholders when the company is cheap. And I believe Mitchell Services is pretty cheap right now. So this is the right course of action from the company. But alongside the buyback, they're also providing their shareholders with a dividend. And I believe it's a pretty nice dividend, like a 2 cents final dividend. In fact, I didn't even think about dividend when I bought this company. I'll show you the chart. There is a bit of a shift in sentiment around this company. So let's have a look at the dividend history. So, they've only given, they gave a final dividend and an interim dividend. So if they give another final dividend, that's going to be like 4 cents, which mean the dividend yield of this company, not quite 10%, but you'll be getting up there. So there's a possible nice dividend yield for this company. But a couple of other really important things about this. So it says confirms its final dividend. So they already issued the interim dividend, now the final dividend, so it should be at 4 cents. The company is also pleased to announce that net debt has reduced from 7.9 million to 1.9 million in 3 months. The decrease of debt by 6 million. So dividends, buybacks, debt management. The other thing they haven't really discussed here is growth. So they extended the buyback because the company is cheap. So many things to like about what they're talking about here. I just like they're talking about capital allocation, or as they mention here, what do they mention here? Capital management strategies. I love when companies or the management of companies talk about that, because in my opinion, this is the most important job of management of a company. What are you going to do? Well, only for those companies that are profitable and producing cash. For a company like BrainChip, they don't have these decisions because they don't have any cash flow coming in. But for these companies, it's the most important job of the management of a company. Okay, so let's have a look at the chart for Mitchell Services. It has been quite volatile. And what's been really interesting with this company is Dynamic, which I did talk about yesterday, didn't I? Dynamic drill and blasting, whatever it's called, Dynamic Group, has been on a tear as well. Now, this is the weekly chart. Let's go back to the daily chart. So this little line, dashed line here, is the downtrend. It goes back a long way, and it broke the downtrend in March at a share price around about 40, 41 cents. But you can see a lot of volatility in this company. But since then, share price has been as high as 48 cents, has been as low as about 39 cents. And when the share price dipped to 40 cents, I went, this is the time. I'm going to buy this, because you can start to see the moving average ribbon starting to go up, which means there is a bit of positive sentiment behind the company. I'd just like to see the share price get to about 50 cents, get to a new high. That would be a bullish sign. But the other good thing is the lows keep rising. That's another good sign. And the other reason why I took a trading position in this company is the volume. We saw expanding volume between the end of last year and through to June. So that's another good sign that there is potential. Some fund managers are taking notice of this company and are building a position. And that can be a way for the share price of a company and the valuation of the company to go on a run. And this company is not expensive. So it's a drilling company, by the way. So it has a market cap of just 92 million. They're paying down the debt. They're creating a significant amount of cash flow, nice dividend, buyback. So there are things to like about this company. But in saying all that, I have thought this company cheap for about 3 years. And yeah, in fact, during that 3-year period, or for the majority of that 3-year period, when I thought this company was cheap, the share price was falling. Anyway, so just keep that in the back of mind. Just because you think a company might cheap doesn't mean the share price will rally. It could take a long time for the market to understand the company is cheap, or may not ever realize the company is cheap. So that coming in number 4, we have Mitchell Services. Coming in number 3 is a company called Ryder Capital. Okay, so Ryder Capital, and the only reason I know this company is because I did a video, ASX companies I know nothing about. Ryder Capital. So I did 3 companies: Ryder Capital, Austral Resources, and Imiron. And I saw Ryder Capital release, and share price has gone up 4%. I saw Ryder Capital release their pre-tax NTA performance, increased dividend, and June NTA. I just saw the increased dividend and went, oh, I'm going to have a look, because I haven't had a look at this company since I did that video. I'm going to have a look at this. So they're like it's a fund manager or LIC, something like that. So I actually did open this up and I went, this is intriguing. Very intriguing. I wouldn't buy shares in this company because I am not attracted to these sort of companies. I don't buy funds or LICs unless I think there's a trade there. So they have announced a pre-tax NTA return of 25.15% after all fees and expenses. They've had a really good year. Our year-end closing pre-tax NTA of $1.39, which means the share price should have risen significantly over the past year, and also the dividend. But they also mention, this is what I really like, they've also mentioned companies, not only the companies that have performed well in their portfolio, but also the companies that have not performed. So you can see what this company prefers to invest in. So we have Austin Engineering up 98%, McMahon up 93%. Both of those are mining services companies. I believe McMahon is, what's McMahon? I forget what Mark does. Aurelia Metals. So that's, I've already talked about Aurelia Metals. I talked about that yesterday. That's a gold producing company. ServiceStream, which is a company I traded, I'm no longer holding shares in that company. SRG Global, which I believe is mining services or engineering services, something like that. And Count, which is financial services. Only up 13% for that company. But they also mention the companies that did not perform well. Janison Education, yeah, no reason, I don't know why they invest in that. And BCI Minerals, down 4%. When one of the worst performers is only down 4%, you've had a pretty good year. So Ryder Capital have had a pretty good year. They should be happy with their performance. In fact, Peter Constable, Chairman and CIO, says, it is pleasing to report on Ryder's marked improvement in performance after what has been a challenging few years for shareholders. So let's have a look at the chart. I am assuming the chart looks pretty good because the NTA has increased 25%. And if it hasn't, this could be an opportunity. Let's have a look. Oh, talk about challenging. Jeez, this is a weekly chart, by the way. Share price fell from $1.80 down to 90 cents in a almost 3-year period. Yeah, 3-year period. So share price halved in 3 years. But definitely share price has moved into an uptrend. So let's have a look at the daily chart. Yeah, share price has moved to uptrend. There has been a bit of a breakout. I would call this breakout, about May at about $1.10. And the share price is still well off the NTA at $1.21. So definitely see why the market has reacted, why the share price is up today, because of the outstanding performance of this fund manager. Do we call it fund manager or LIC? I have no idea. Anyway, good performance from Ryder Capital. I'm so happy I did a video on you. When did I release that video? 13th of November last year. What was the share price then? Oh, near the low. Oh, it just bounced off the low when I released that video. There, just bounced off the low. Share price, when I released that video, share price was below $1. So it's been, it's gone up 20% since then. You should have bought on me releasing that video. We all should have bought Ryder Capital shares. Anyway, so I'm very happy to see a company that I knew nothing about release a pretty good announcement. But I'm still not going to buy shares in Ryder Capital. And the whole point of me doing these videos is just to share ideas with you. Coming in number 2, we have a company called Austco Healthcare, up 12.82%. Austco Healthcare trading update. They released this at 10:26 a.m. So I actually did see this because when I'm doing a night shift, my shift finishes about 7 o'clock. And typically after a night shift, I go for a walk. After my final night shift, I usually go for a 2-hour walk or run. So I usually get back home at, say, about 9:30. And then I usually go to the supermarket. So in fact, I get in front of the computer at about 9:45 to 10 a.m. So sometimes I'm still going through announcements when the market opens. So I actually did see this announcement before I went off and did something. So on other days, if I didn't do a night shift, this would have been a surprise. I opened up this announcement and I went, oh, the share price has to rally. The share price just has to rally on this. The only reason why the share price wouldn't rally is if the market expected it. And what do I mean? So they're talking about revenue and EBITDA. And look at these, just read it. No, actually don't read it. I'll just repeat it at verbatim. Revenue to be approximately 58 million, which is a 38% increase on financial year 23. EBITDA is expected to be in the range of 7.5 to 8 million, an increase of 108% or 122%, depending on where it falls, from last year's EBITDA. What a year this company has had. Now, in saying that, one thing I do know about this company's chart is share price has been doing nothing over the past 6 months. Oh, almost 6 months. Yeah, well, actually, maybe even longer than that. Share price doing nothing. And, oh, look at the volume. I was thinking this could be a breakout for Austco. That's what I was thinking when I saw this announcement, because I knew the share price was going sideways, sort of consolidating. But there was a little blip here back in February. I'm not sure what this blip was. This would have been on the results. Blip, and the share price immediately fell back. And I do remember that. So, and it's almost the same candlestick, apart from volume. Volume is a little bit higher. So it's going to be interesting to see what happens through the next few days, whether there's going to be a sell-off like we saw back in February, and the share price goes back to 19 cents. So definitely want to put in your watch list, because just those numbers, and this company doesn't seem to be that expensive. A markup maybe 70 million, 79.37 million. So it doesn't seem that expensive for a company that has grown their revenue and then EBITDA fairly significantly in the past year. So the profits, I'm assuming their profits are going to be like 3 to 4 million. So PE ratio maybe 20. But I'm just guessing on the profit because they just gave us EBITDA. So that's coming in number 2. We have Austco Healthcare. Coming in number 1, and I'm a little bit biased here. I will admit I'm a little bit biased. Telix Pharmaceuticals, up 10.97%. It was up by a little bit more than that. Share price did get above $20 at one point, so that means the share price would have been up about 14% or so. CMS proposes payment improvement for radiopharma diagnostics. I actually did see this announcement, and I just saw it and I went, no, I'll move on to the next one. I didn't realize the market would love this. And then I opened it up when I saw the market did like it, and I went, oh, okay. I underestimated this announcement. So welcomes proposed changes announced by Centers for Medicare and Medicaid Services for the hospital outpatient prospective payment system rule to improve payments for diagnostics radiopharmaceuticals for Medicare patients in the United States, facilitating continued patient access after traditional pass-through payment status expires. So this should be beneficial, it seems, for Telix. I definitely can see it after I read this announcement. I can definitely see why the market liked it. So share price up 10%. So let's have a look at the chart for Telix Pharmaceuticals. And this is going to be a pretty good chart. I'm telling you right now, pretty good chart. It's not the most bullish one-day candlestick. So when you see this sort of red candlestick, there is a bit of selling coming on. This is a really bullish one-day candlestick. The one you see on 31st of May, that sort of green one-day candlestick, and you can see the selling after that. And that dip was a perfect opportunity to buy some shares in this company. Sometimes you don't always see a dip, but when you do see a dip, that's an opportunity. But a beautiful looking chart for Telix Pharmaceuticals. Markup of this company is ridiculous at $6 billion, but the revenue growth has been phenomenal. And and when I say revenue growth, the revenue of this company has gone from $7 million in 2021 to $502 million in 2023, and probably will be $700 to $800 million in 2024. That's in a few years. It's gone from almost nothing to almost $1 billion in revenue. So you can understand why the market has fallen in love with this company, because of that sort of growth. All right, so that's Telix Pharmaceuticals coming in at number 1, the top stock of the day. What was I going to talk about? Oh, I was going to look at some comments and the 2 things that happened in my investing life the last few days. The first one has to do, in fact, with TradingView. So if you look down the bottom here, we have Stock Screener and Pine Editor. So if you look at any indicator, so I'll just open one up for you. So Breakout Finder. And Breakout Finder, they've got a script here. So in this Pine Editor in TradingView, you can actually edit any of these scripts. And I was thinking, oh, I should develop my own indicators. So I was beginning the journey of learning about this Pine script because that's what they use, or that's what they call their script. So I was starting to learn about it, and then I had a light bulb moment at 3 o'clock in the morning. This morning, I had a very quiet shift, at work, and I had this light bulb moment at 3 o'clock in the morning. And I was like, why am I trying to learn this script when I could just use ChatGPT? And yes, you can definitely do that. Just use ChatGPT. And I mean, we have heard stories and how coders are now can get through way more work because of these sort of AI programs like ChatGPT. And then I tested it, and yes, it works. I just put a prompt. Can you provide me with this Pine script? This is what I'm looking for, blah, blah, blah. And then I'm eventually going to have to better phrase what I'm asking ChatGPT to get exactly what I want. But yeah, it works. And I was just beating my head against the wall going, why have I been going through trying to learn the script or how to develop the script when I could just use ChatGPT? So that was probably the second interesting thing that's happened to my investing world over the past few days. The other important one, interesting one, is I am testing. It's not a new trading strategy, but one of my rules that I have been using trading is not to trade story stocks. I want to limit the amount of story stocks. I want real companies. But I am now challenging that by testing whether I can trade the story stocks. Because one of the things I've noticed is the movement in some of these story stocks can be quite significant. And I just want to see if I can take advantage of that. So I have started to trade a few story stocks just to see. I'm looking for patterns. That's the other thing. I'm looking for patterns. I've been looking at these patterns for the past 3 or 4 months. And I'm starting to see some similar patterns to those companies whose breakouts, that's what I'm looking for, breakouts, don't work compared to those breakouts that do work. And one of the most important things to look for is share price in at least a consolidation phase or moving into an uptrend, and then the breakout happens. You don't want to see the share price in a downtrend and the share price, when it breaks out, to be less than a 3-month high, which is not a surprise. For instance, I do have a high volume spec watch list. I've been using this. So for instance, Australian gold and copper, beautiful breakout. And you can just, if you go back to their breakout, which was in May, look at that. So the share price was already in uptrend. And then they had to release their news flow, and look what the share price did. It went from about 10 cents. You could have bought on that day at 12 cents. It went to a high of 60 cents. Now, some of the breakouts that have not worked, unfortunately, I deleted most of the companies because they're just not working. I think DY6 is an example. We can see the share price rose a fair bit in one day and has pulled back. And that's what I want to understand, why the share price pulled back. There was no excitement after that initial day. Compare that to WTM. Now, we've seen share price fall again, but that's okay. This is what I'm looking for. This is exactly like Australian gold and copper. Share price in an uptrend, then the breakout, at least a 3-month high, possibly even more. Then the share price rallies again. Now, the share price has pulled back, but this could be a pullback opportunity. So this is what I'm testing and looking for. And I just want to find patterns. Patterns in, not the noise, but patterns. KLI, same thing, not quite. 2 really good days. Now the share price has pulled back, has fallen below 10 cents, but it has broken out. So I have bought quite a few companies that I think follow what I'm looking at. In fact, this is one of the companies. I saw the pullback and I went, now's the opportunity to buy some shares in KLI or Killy Resources. Also bought some shares in Infini, I88. There was a pullback today and I went, ooh, a pullback. Exactly what I was looking for. A nice little pullback today, but there's a big gap there. So it's going to be interesting to see how this company trades over the next few days. This could be a little bit of a mistake, but it's okay. It's a very small positions. So I'm just testing it. The other one was Actinogen. And there was a pullback today for this company. So that's what I'm looking for, pullback. And we saw a little bit of pullback today. And so I bought some shares at 7.1 cents. And it's now 7.4 cents. So it looks like it's done well. And before this, there was a few other ones I am testing out. Hytera. It's looking pretty good. The volume is very important as well. Hytera, Encounter Resources. And when I say small positions, $1,000. That's all I'm talking about, $1,000. And then if these work out, then I can build on the position if the share price keeps on climbing. So Encounter looks pretty good as well. Similar pattern. And I also got Race Oncology. They're a little bit different. Not quite the same, but this has been sort of an uptrend that has been going for quite a while. Now, this is a little bit different because the share price was in a downtrend. So when the share price initially rallied, I would have been interested in this, but the share price went from a well-defined downtrend into a well-defined uptrend, or a developing well-defined uptrend. So I do like that setup, which tells me there's a lot of strength to whatever this company did release. And you can see definitely a lot of dips in this, and that's exactly what I'm looking for. And the other one was Telix. So how many was that? 1, 2, 3, 4, 5, 6, 7 positions within this. I'll call this a new strategy that I'm just testing. And I'm going to see how successful this strategy is over 1 year period. I have a feeling it's not going to be that successful because I have a feeling the miss rate is going to be quite high. And then if it's not that successful, I not give up, but just not focus on these sort of companies, these story stocks, and keep all my focus on real companies like SKS Technologies. So I took a position in this company the other day as well. Was it yesterday? The chart looks pretty good, and there's no complaints about that chart for SKS Technologies. And the other one was Pioneer Capital. And I've mentioned that I'm really interested in value, and this could be a value stock. So down a little bit today, but that's okay because it was up pretty violently on a Friday and Monday. Okay, so that's my new strategy. Just testing a new strategy. Sometimes I do this because I want to see how a strategy might work. I tested America and I didn't like it at all. Too much fickleness in the American market. So I'm just going to buy American companies that I think I could own for the long term. Okay, I was going to get to some of your comments, but this video is getting to be about 1 hour long. So I'm going to leave that to Saturday, which is Saturday the 13th of July. And hopefully I'll get through quite a few of your comments and questions in that particular video. Okay, so that's all I have in this video, and no charts. I've shown you enough charts, I suppose. So no charts. So if you do have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and whatever. The other thing I should mention, the other thing I did is I've got a trading journal now. I have never written a trading journal, but I'm starting to do that as well because I've put everything down on spreadsheets and that sort of thing, but I'm now writing it down, everything I do and think, and maybe not think, but everything I do. Anyway, so that's all I have for this video. Have a good day and talk to you later. Bye.